Yes, everybody. Let's get to it. Going on back. Come on back. How are you today, folks? Get with Harmonic Pattern Collection, the Trading View version for free. Send your username to hpc at sr-analyst.com. Get that 14-day free trial. And remember, we're giving away a prime deal for July. So if you purchase the Trading View, you'll get 6 months of HPC Pro. I recommend MetaTrader 5, especially for crypto. So get with that, and then everything else starts at harmonictrader.com, right? What's going on, chat? Victoria, Muhammad, David, Alex, Robert the Bruce, Carthago, Hawk, everyone else, what's up? Welcome back, guys. What are you doing here? What is everyone doing here? You guys, let's get some vacation coming up, right? Let's get some vacation. Let's plan a few things out. Oh, but we have a few things to discuss. Let's talk Tesla. Let's get right to it. What's Tesla going to do? Earnings tonight, guys. What do we have in front of us? What does the framework say? Beautiful crab pattern right now. Can't get through our 250, 275 zone. And even if we have a counter HSI, but for Tesla, it's kind of a short-term and a long-term take here. I think we are super bullish on the long term. Why? Basing for 2 years. It's Tesla. It's the richest man in the world. Okay. It's just like Steve Jobs. It's Steve Jobs times 10, where you don't bet against this guy long term. My only thought is at the right price. So what is the right price on Tesla? We had a T1 weekly Gartley that came right off the hop at 145. And if you guys go back to like March or April and look at the sessions, I was saying, 145 is really pushing the edge because we could come back as low as 127. I said I would rather wait for some development, and we got that, and I clued my folks in at around 180 on Tesla for this big move. But we ran into the T1, T2 levels. 253 is the big number. And so we might be in the process of needing a check back, retest, type 2 return, something like that. Maybe what we do is we come back down 220, 225 area, either to this top end of this downtrend and then we go, or a full type 2 on the Gartley. For me, that's probably down. I am not in Tesla anymore off of that initial run. And I'm thinking 220, 225. It's been a great trader. But there you go. And here on the hourly, this is my other thought, because we know how this stuff can go in the market. It can go aftermarket crazy. We have this Gartley. And so on the hourly, and what I'm thinking is that even if we get this check back, and this is my vulnerability on this position here, is that, I caught that first move, but we very well could do something like this in the pre-market and aftermarket and then explode based off of that hourly. Keep an eye on it. I think it's pretty clear with Tesla, though. Anything above 271, 272, and then you just slap your 886. Okay, and then just full on retest to the 886, which is like 380. That's what's going on here. Hold on. I'll get good at that. One sec. Let's connect some dots. X, A, B, C, D. B is 618. That throws us up a Gartley, the Gartley, 348, 350. 350, there's a bunch of things. Top end 886 is like 382. And that is above 270. Okay, so I say like a year from now, Tesla's trading 380. No matter what happens today. It's just where is the next entry on this long that would set it up. Now remember, one of the things we caught, check out the 2X Tesla Bull shares, TSLL. We were down here at 652 earlier in the summer. You know, it wasn't too long ago. It was June, coming right off that beautiful bat. So is this a type 1? Could we get a type 2 on that and then be solid? Clearly, look, we stack the evidence. That's what we do. We put a rather complex framework of MWs, type 1s, type 2s, all of that, and we interpret. Well, there's the initial reaction. XA at 652 with confirmation. That's ideal stuff. Looking for target 1 goes to target 2 and cannot get through. Now we've got a HSI. Okay, can't get through 15. So where does that go? Well, it probably stalls up here for a while. And this is the 2X bull. And again, even this thing, if it's really going to explode and break out, that's above 17. What would be ideal is some kind of retest, check back down, and then complete that. Look, we're hitting oversold right now and then amplified. These are weekly. And they've given you the inflection. Not official. Not yet, but look, it's not a spot where I'm favoring the long. I'm favoring retracement. We'll see. Maybe it explodes tonight. And even if it does, even if it exploded, okay, because here's a daily HSI. Oh, that's the TSLL. Where's that? That low? 1345. So if this would be a high-level HSI continuation, still check it back. Please. Please, please. There's Tesla. Tesla 2. Now, we got this counter HSI. We have one of these situations where, look, it's a perfect, let's just go off the last bearish, the last pattern. That's bearish. Okay. Bearish, counter HSI. That should push it up into the zone again. What's the low? 243.75. So the ideal pattern situation that should happen here. Oh, come on. There you go. Is we should come down to target 1 on Tesla. And again, this could happen in the pre-market. It's going to be funky. I guarantee you it's going to be funky. You get extreme volatility. And then what will happen is you get to the 220 and then you'll just react right back. Think about that. I feel like let's get past this earnings, and then Tesla's probably going to set up for a massive, massive continuation, guys. Massive. I can't understate it or overstate it. Massive for where we are. We're broken out of that downtrend. This was a successful test, a successful weekly test, in my opinion, and setting up that this is going to end up being a massive 4 or 5 year consolidation range where, yeah, someday, are you with me? Someday, like some of those other magical assets, we're in the C point phase of a someday. And I don't think this is really a stretch where not only are we looking for Tesla to break out of this range, but can we do a 1618 someday crab pattern like that to 615, 620. There you go. 616. That's the kind of thing I'm thinking that we finish this little current retracement trench back. Maybe it's a 382, maybe 220, something like that. I'm looking for this kind of corresponding move starting in the fall. And then, go to the 886, I 380, but look, everything we've seen, we know the deal on NASDAQ. I'll get to that in a second, and we'll update it. We're at a big 1618. We're going to work our way through this retracement. And then it's after this retracement, wherever that is, if it's a 10% correction, a 382 off the all-time top, whatever it is. Okay, guys, it's the next move. It's the next move after this kind of a few months phase. Typically, we do the old September, October pattern of bottoming out after the retracement, and then gangbusters. Okay, I just think that's the overall read. We've got just so many of these stocks that have set up in a way where it's leaving the station. Here are the cues. Okay, cues. The deal. The deal is that, look, the 1618 is firmly, like, I'm super encouraged by the fact, super encouraged by the action at that 1618. Like, I'm just, this kind of is just a reaffirmation of the harmonic state of the market. And we can just lay our projections going forward no matter what. Remember, 236, minimum 445, that would be the hop level. There are discernible levels here that are setting up. And then we've got a crazy 382, 408, what have you. It doesn't matter even if it was that deep. I don't think it's going to be that deep. In fact, I think we're just going to get some kind of HSI dot that is like a 10%, 7 to 10% correction. And then we go again. I mean, I'd say 408, whatever that is, it's once that comes in and that can stabilize, I think if it's 445, 424, 408, it's under 450 is the real opportunity. But it's then, after that retracement, it's like this. It's not only that, it's fully on. It's I'll say it this way, okay? It's like going to 314 phase. That's the framework. The extreme zone of patterns of extensions. 2618 is 662. 314, take it up as high as 750. That would be my target for the next 4 years of where we're going. Much like the way that I was barking about this low, and you guys know I was barking about that low and all those patterns back in 2022. A lot to get to. It would. What's up, Red? Yeah, it would be. It was a great comment too, by the way. He's saying it would be a back test of this prior all-time high, and it would be a 382. You would stack it. It's actually, I'll tell you what, on so the NASDAQ futures, this is quite a chart. Okay, check it out. Even NASDAQ futures, guys, it's a perfect butterfly. And I said this 2 weeks ago. It only took us 1 week, 1 bar, 2 bars maximum to know that this zone is in effect. Yo, hello. Come on back. Totally in effect. We could ride this lower. And I think 19.6, we're at 19.967 at the moment, guys. 19.6 is simply an 886 of the summer rally. We should be considering that. as low as down to HSI oversold, but you're just at the 50 level on the weekly. So fireworks don't happen until we break under the 50 level. Also note, amplified, that's up there. That's still up there. If that broke under the 50, then we'd have some follow through. Okay, but this whole area, XA level, 19,940, capping it, we're right, like I said, 975. And we are, just for those, my folks, Discord folks, and others, we're right now sitting on a shark. And there's our 5-minute dot. Hello. Here's a counter 5-minute dot. Check it out. We had a perfect type 1 yesterday down to 918, right back to 64. But now we have a double dot actually on the 5-minute. I would look at this open right now immediately. 960. And what's the prior bar? That already retested. That was 955. That's a critical support zone. Yo, for my Discord people, this is what we were looking for about an hour ago. There you go, guys. What is it? Confirm in November? Probably confirm in November on all of those. Look, remember, we were the 1618 hit. We have dots all over the place. There's bearish dot. Remember, what's the you coming in on the time frame? What's the last dot? What's the last dot? Bearish. Play it down to the next bullish signal. Oh, okay. We have HSI right now today trying to come out on the daily. On the daily. So that little throwdown in the last week is trying to stabilize. We might come in here by Thursday. We might be in the same ballpark, quite frankly. You know, it's 19.6 to basically 20,000 and change for the foreseeable future. Next couple of weeks, going to be a tight range. Can we check back? That would be as low as 19,868. Got to retest today's lows. And I think we'll do it because we're rolling over. You know, there's the 5-minute. Let's maybe relieve that situation. But check it out. I mean, it is a type 2 shark. Shark to 5-0 on the 5-minute, back for the 2. If this fails, if these lows fail, even if like 927 fails, which I think it will, 691, that would be something to be looking for into Thursday. So we're winding our way down. Importantly, the character of the market has changed for now. If we get some dots and we get a 3-bar breakout, okay, maybe we get a resumption. I don't think this is going to be the end-all be-all drop, because I do think we could probably see something where market has a little rally into September and then a more severe rollover. We need to generate oversold condition. I mean, that's a good start. That's a good start, and that's a daily. I would be probably more inclined when amplified turns up and gets above the 50. If we're really going to see something that goes back to retest the all-time highs. And I do, just so everyone knows, you know, let's get this. This is going to be the last retracement before the run, before a bigger run. And I would hope the deeper the better. Take a look. This is simply the summer rally. I mean, we could say it started in late spring, but there you go. Maybe just do it. Let's be real. Summer started here. Didn't even start there. Where's the 21st? Summer started here. Sorry. There it is. So we're at the 886. But you go back and just think about it for the year. Well, there's 2024. And this is a pretty interesting little tidbit. Hold on. So pull it off of the January low. You know, there's one all the way down. That was 707 territory. Back up. Amazing. 224. And now off of that swing, like 382, you guys see what I'm saying? Even a minimum retracement gets us to like 19.5, 19.6. I think that's the number. So be patient with it. We need to let this come in a little bit more is what I'm saying. And we'll get it. I mean, I think it's something where we can let it happen, let it kind of fall out, give it a day, a couple extra days. But much like we were here, we didn't have HSI. Now we do. But we stabilized, we had an inflection, and then we got above the 50, and that was like in early May. We had a nice continuation. Same type of thing we should be lining up from here. Look, HSI has been a gem on this cycle. It has really been pinpointing continuations, high level retracements with a great degree of accuracy and putting us in the ballparks of, you know, where we should be looking for the market to continue. You know, we go back here to January, it was a very small retracement. Same thing here back in early December, and then even back there, that trigger all the way back in September. You had a grinding kind of higher market that was taking shape. It didn't give you any deep retracements. That's what we could be sitting here. That's what we could be sitting looking at here. But we're probably, today is the day. Today would be day one, but it's not official till the close. Let's keep an eye on it. That's NASDAQ. S&P 500 has actually been stronger. Those futures, you know, it's a steady uptrend, and we generated HSI yesterday on S&P futures. Can we check back? Can we, you know, 3-bar breakout after today would be above 56.27. So it looks a lot like what happened back here in May. Had some early overboughts. We pause. And this action here was enough to just throw it down and let enough air out of the tires to where we could resume. Is that what's happening here? I think we'll know. We'll definitely know by Thursday. We will definitely know by Thursday. And could we actually resume and continue higher now? It's interesting. Also, take a look at the weekly chart, maybe even monthly. Our all-time 1618. You know, that's 59, let's call it 6,000 monthly. That's what we're looking at. So let this thing just come in. This one is, sorry, the SPY. Hold on. SPY is at the 1618, which is 565 with a dot. Yeah, crab pattern 556 on the daily, but the weekly, monthlies like this. Yeah, we're there, and the SPY, interesting, the SPY is different than the futures. But you guys see that? Crab pattern. If we could get a check back and a dot, that to me, that would be the ideal spot, because then we would have the pattern. You'd have the confirmation maybe in 2 or 3 more weeks to set it up for something. We're really at the tail end of this. Even if we could push a little bit higher, maybe 3 to 5% higher, we're kind of in that completion stage. What's up, Red? No, I don't think so. The retracement was 707. Why would we look for a 618? Maybe it's more. I think you stick with the minimums. The stick with that the minimum swings. The comment was, I think it was on NASDAQ, but the comment was, if we had a 707, which was, I guess, we're talking about NASDAQ. S&P was a little bit different. That was only a 50. That was only 50%. 707 was like that. But it doesn't mean we necessarily have to have a 618 or some kind of ascending scale of retracements. It's more, let me do it like this. Like 707's like that. And up. But there's a 382, That's what I mean by 382. This is a 382 spiral. I mean, that was one of the earliest things I recognized. If we're going to define price action and, states of trends relative to their ratios, I mean, that's really what we do. It's like, okay, what does this trend channel look like? Thrust, 382, perfect. Thrust, 382, perfect. Every retracement is a 382 of the last swing. SPY's been firm. So if we get that, your swing 382 for the SPY is like 549. But that's where a dot, a check back, come back in here. It's not one inflection. It'll be a few bars and then go. Looks good though. I like it. Yeah, it was NASDAQ. That's all right. But I'm definitely interested in what happens after this retracement. I mean, because look, with the way this has been, if I was going to look at the SPY chart, if it was any time frame, if this was a 5-minute time frame, I would say, well, okay, there's no confirmation here. We're clearly above XA. It's probably going to be an overspill move to 581. Or can I get HSI dot with this check back? Even so, retesting 565 is likely now. We're talking next 2-3 weeks, and then do the roll. Final piece to this, that if you guys look at relative strength or amplified RSI on the software, and you should get the software if you're in here, this is a great sign where we wait for amplified to come out of the zone. Now what you're looking for is the next leg to send that out of the extreme and then back down. So it is, we're going to look for this kind of a phenomenon in the next week or two. Can we finally get out of that zone? Because at least that would set you into a correction, much like we had last summer. And I do think we are in a similar stage as last summer. Because remember, last summer we were right at the 886. And the whole time we said, pause, pause, pause. And look for the HSI, and then we're going to go hard. And we did. I think it's the same thing. But it's just where we are right now. We're rolling over, doing the inflection of this reaction. So keep an eye on that. A lot to really consider here, even though we're in the summer. And I think that also applies to crypto. And so let's jump over to crypto, because Bitcoin has my attention. Bitcoin is really challenged at the moment. Why? We've got some things to bounce off of. So last week, we know we put in a dot. What does that mean? Well, it's just a temporary limit. It got oversold. But if we go dot to dot, again, where's the last dot? No matter what time frame you're on. Where's the last dot? Well, that then shrinks this whole range. Now from like 72 to 61, now we shrink it 69,350, we can call it 69.5 to 60,600. That is a really tight, approximate 10% range that this is going to define everything. This zone. So now we're shrinking in the zone. I do think we will come back and have to retest that little dot, but that's okay. And then here, daily, yesterday, I did want to bring this up. Look, we know about the bat pattern up here at 70,921, but yesterday we put in oversold. It would have been better if we would have converged at the 71K and then rolled over. That would have been the type 2, but we didn't. So we got to just let this do the reaction back down, and it's more about the weekly though. Again, I have been saying this for a while. I'm intrigued, okay? And I said this last week that this is the dot and this is the bar. This is the signal we've been looking for since really what we talked about in June. And that is then just needs a dot trigger retrace. And the other two things, how do we know this is the launch pad? Seriously, like this is setting up. We're getting our levels. We're getting our triggers. How do we know? Well, we're going to want to see amplified come down. There it is. And then back up. So whatever breaks out, if maybe it's 2 or 3 weeks to break out, but that is the pivot. And that's probably a breakout and close above last week's high. So if we get a close above 68.4, that should be a significant signal. It's not, and I don't think it's, I've been saying for a long time, it's 75, it's 75, it's 73.5. I think it's now 68, 68.5, because if you break out that level, you spring it. You crack this 50, okay? And the other aspect of what's going on here, look, that's a complex formation. We've talked about those forever. That's the kind of formation we want to see, where then it sets up for the retest and then the retest just keeps going. BTC CME, it did the 1-2 dance. I'll look at that. You mean the futures? Bitcoin futures? Well, there's no, let me do this. What was that, daily? Did the bat, was daily bat? Well, it did do the 1-2. Now, yeah, well, listen. Again, with the data feeds, okay, so someone's saying check out the futures chart, because that did do the 1 and 2, and it did. So, and that's a good one to look at, 1 and 2. Down for 2, but now how would we treat that? Well, this is a continuation potential. And how about we fill, that would be great to fill this gap. It just stacks it up to where if we go back to 60 and retest that, that would satisfy several conditions. No, you know the feed, and again, guys, I'm trying not to. This bothers me more than you know, because I'm really about uniform results and bringing statistical norms to the structures, analysis. I mean, if we fudge patterns, we're fudging ourselves, because we need to be dealing with apples to apples, oranges to oranges. When we have these various data feeds on crypto and we get discrepancies. It's like, okay, is it a bat? Is it a shark? Did that confirm or not? And it just drives me crazy. But you have to kind of stick with wherever your brokerage is. Here's Binance US, and this is an interesting chart because we had a shark where 57.6 at the hop, it was an overspill move, but that held. And so back-to-back patterns, this is still kind of legit. That's why, but I do think this is shrinking. Our range is shrinking now. And the shark, look, this shark back here did T1 dollar sign, T2, T2 dollar signs. It did, as you say, it did the dance. So we just have to go off of confirmation. Where's the last confirmation? 2 weeks ago, it was down here, even though it was overspilled. Now we're bearish. Let's respect that. Just for a little while. It hasn't set free, but I think, we're going to trigger something here. And I think it's August. I really think whatever the trigger, ultimate trigger is, it probably comes in August. Now, a lot of people are asking me, how do you know? Like, Scott, which way is this going? Here's the Bitcoin monthly chart. And this is the thing the reason why I'm saying that if we can push it now and we can fail this chart, that would trigger the continuation. Because to me, it's a lot like last summer. A lot like last summer, we had a dot HSI there. Okay. And I have to explain something. This dot is not related to that check back. This dot is related to that signal. Why? It checked back. Where's the second bearish candle? Not all the way till here. It's important. 71,897. It's still amazing though. This HSI did get checked back, but 2 more bearish candles would then give you another signal on that. Don't mean to be confusing. What I'm saying here, okay, to make it clear, is that if this is a valid dot, meaning we're going to see something off of it, we don't violate the high. We don't even violate the open trigger. For the monthly there on this Binance US feed, it's 67.5. And it comes down to the monthly close. So let's talk in a week. In a week. Got to be patient. My crew, I have a great premium crew. I appreciate my members so much. And I like, because you guys help make it fun for me. And it's great to watch people learn and overcome the learning curve. And the number one challenge I see with traders is that they just aren't willing to be patient. They're ready to trade the market, but the market's not ready to be traded. That is so critical to any methodology you want to use with the market. If you have a signal, you have a way to line up the market. If it's VWAP, moving averages, stochastics, XYZ, check back, reverse flip. Okay, the number one job as a trader is to coordinate your behavior, your physical behavior to those signals. And if we don't have signals, we got to just be patient with it, not freak out that we're going to lose something. Speaking of losing something, we're losing gains on the NASDAQ right now, and I think we could see a big drop this afternoon, guys. I got to show this to you really quick before this really gets away from us. I think NASDAQ could go down another 120. We have this daily HSI, okay, and it's going to come out no matter what, but check out the 5-minute. 5 minutes gotten ugly here as we have been talking. Yeah, remember I said if this breaks under the 27 mark, look, 1816, obvious T1, but 691. Keep an eye on that. Keep an eye on that. I caught this short earlier, but then I just, it was a scalp. Probably should have been writing that for the larger move, but it's summertime. And, we've been, just so everyone knows, we've been seeing 10, 15 point ranges on these 1 minute bar, 30-second bars. Pretty nuts. Got to get the trigger. Here's a 30-second. Like, where's the dot? Where is the dot? There's dots here. We're bearish. We had signals up here at around 2065. There's some dots. Nice continuation dot on the 30-second. And again, another continuation. Wait for the dots. What's up, Prez? Prez is saying the VIX has been pretty wild. We looked at that last time with Mitch. Great conversation last week with Mitch. Mitch is a treasure, guys. Mitch Ray, TA. Just what a great guy, and what he does on his show. Boy, if we would have had that stuff growing up, I would have not have spent all the money I did on books. Gonna just sit back and listen to him. There's your VIX. Yeah, just another inflection. Come on back to 12 real soon on the VIX. The VIX has been disappointing. Look, when you have, guys, ladies and gentlemen, 2 points of note, okay? 2020. Amazing reading. Now, typically, VIX is overbought at 40. 2020 COVID got to 80. But the general downtrending action of VIX is just another sign of insane amounts of money being flooded, where the real players in the market, they're so backstopped with cash. Forget about it. They don't care. That's why they're just waiting, salivating for a 10% correction and getting ready to pounce on it. Here was the financial crisis, and that got to 90. Amazing that COVID was almost as high as the financial crisis. But, this was last decade, really starting 13, just a flatlined VIX. And here's another flatlined VIX too. So I'm not too concerned about the VIX. And in fact, when you get those kind of pop and rolls, that's probably it. And I would look at the VIX like this. We can use the dots. And so think about it this way, guys. All right. Where were the market lows this year? The market lows like April, with a yellow dot. Here was back in May. Yellow dots. That came in right before. That was that little mini June correction, and then June took off. But now surge with another HSI. It's probably done. That's probably the amount of air they're going to let out of the tire for now. Let's see. Come back to that. Yeah, look. I know NASDAQ's down today. Apple's up. NVIDIA was up. Meta's up. Oh, Amazon's up. And I did want to show you this. Listen, Amazon and these others. Amazon's was up 6. Okay, but check it out. Amazon is about to register a massive, it's not even going to be today. It's going to be tomorrow. It was deeply oversold. I can't tell you the last time we saw that deep -16 reading on Amazon. We got to go way back. We had to go back, yikes. And that was even that low. October of 22. Yeah, I thought that was really something. Again, Harmonic Strength Index. Something's up with Amazon, because whatever this retracement was, 205, 202, slam it down to 180, that generated a vicious oversold reading. And if you go break it down on the 4 hour, no, hourly's fat patterns here. Fat shark. Back to back, no less. So I'm liking this because today's the pop move, but I think we go back and retest the all-time highs to 200, retesting that butterfly. Also, take a look at the last several patterns in this trend. You tell me. Every bearish pattern is just a throwdown reaction, return move. Throwdown reaction, return move. Throwdown reaction, what do we do next? Return move. I'm going to say something also, okay? That the patterns look phenomenal in this market. Why? Because the trend is so raging up. And we've got lots of strength under these sweeping trend lines. I'm telling you, the last 2 years has been a lot like the late 90s, because every retracement usually had some kind of a pattern that right at the 786 or 886 or 618, you hit it and you go. You hit it and you go. Probably Amazon building here at 182, 181. That might be the low for the next pivot continuation. A whole bunch. And dare I say that it might even be time to circle back on these and reload. The other one, Google. Okay, that got close to 200, but let's go to our daily. This sucker is at all-time highs, and HSI yesterday. HSI yesterday. So even if this came all the way back to 160 or 170, I'm triggering at 182. Because my whole rationale is that this whole continuation, trend continuation, is what's going on here. And that just runs. So your job is to ride that trend channel for the next few years all the way up. I'm going to do it like this. All the way up to like this. All of the markets, the major techs, Bitcoin, QQQ, I don't care. Okay, all of them are going to 1618. And maybe the rest of the market, we've seen the Dow, but even some of those old economy stocks, they're all going to make the move. So 1618 for Google is right there at 192. 192. What was the all-time high so far? 193.31. Hello. That's nuts. Also, we're trying to show a dot on the month, but that's not official until the end of the month. So can we hit here, grind sideways with an eventual, and again, let's stack these targets because this is something I'm going to be doing a lot more of, okay, in the weeks and months to come, is I'm going to line up the 1 to 3 year targets. It's more like 2-3 year target. But, you know, Google to 295, that's where it's going. It's not going to be this fast, but folks, we're going to ride that trend channel much like the prior decade. This stuff doesn't repeat, but it rhymes. And that's how you should be looking at this. You know, it's where is that? Sorry. Here it is. You're like this on that one. And if we're going to compare this kind of trend channel, relatively speaking, here, you're like there with this whole thing to move. It's kind of like Bitcoin. You know, it's kind of like the way we're looking at Bitcoin, where we want Bitcoin to do and finish the reaction because it still has this bigger blow off move to do. And that was, from 2020 all the way to topping out 2021. It took a year to do that kind of a move. I think the same type of thing is setting up. Yeah, I'm bullish after this current 1618 retracement that we're all going through this summer. Dare I say that go to summer camp, kids. Go to summer camp and come back in a month. Okay, and when you're ready to do some trick-or-treating, that's probably the time the most of this market sets up in that regard. One or two more in this mega tech land. We haven't really dug deep on these mega techs in a while because they've just been doing what we knew they would do. They just go, go, go. Here's Microsoft. Remarkable. Yeah, just like this, what I was saying here. We're on these trend channels. Trend channels. Okay. I'm really looking at the end of this month. We're going to know how much of retracement we're going through currently on the Qs. But when you see Microsoft doing stuff like that, if we were dropped out of the trend channel or breaking down in some way, I would say maybe we need to assess this differently. But no, this chart, again, just a firm railroad path up to our targets, our big targets, our monthly targets. That's what we're talking about. You're talking about riding that train into targets beyond, like this. There you go. I know Microsoft's already above its 1618, but we were looking at 1618 on Microsoft last year. Last year, 437. Just hit last month. But this is more of the long-term plan. 314 extension. Okay, so where do we jump on for that move? What's the continuation in this channel to get up there? Let it happen. It's probably in the next couple of weeks that we see that. And then you have these 2x granted shares that are interesting, that I think it's some of them. I showed you TSLL. That was real ideal. Here's the Microsoft MSFL, and NVIDIA did that. I mean, NVIDIA was super strong, and I think that's NVDL that had some things down here. I look at the low at 10, but I think we finish this retracement. We're going to see continuations aggressive in all of those to where this stuff continues. This stuff will continue. NVIDIA's basing right now that NVDL is like 67, right where it is. Interesting that we talked about the trend channel. We have a high level HSI dot on the daily for NVIDIA at 120, trying to hold up in there. It's been a long time since we've seen a high level like at the top of the channel, but that's strong. I interpret that as strength. So let's see, 120 is a number on that, but that's just keeps on. Couple others that where is let's look at the SOX. So SOX index is another clear railroad path. This is we were projecting this weeks ago. So if this is a correct assumption, and it is, then median line support's like 51, 5200 on the index. And we just put in an HSI yesterday. So a lot of these did register oversold readings, and I direct your attention back to the last few HSI signals and dots. There's a signal, there's a dot, there's a signal, a signal, a signal, and a dot. It puts you in the ballpark. The dots help you pinpoint. But the trend, that's the framework for the long term. Looking here, I think there was on an hourly, SMH was, yeah, here you go. This is SMH too, but look, hourly, we have a big bat pattern right now. It's around 5,300, let's say. But that should continue. What's up, GoldenEye? Wants to look at APPL, AAPL, right? As an Apple. Or is it APPL? No, it's AAPL for Apple. No, I knew that, but I thought that the 2X one was, it's that 2X granted shares on Apple is AAPU. There you go. There. That's the 2X. Was a dot last week on the daily. I'd rather look at Apple though. Apple dot, but big, a crazy move. Like since the Gartley at 167, or the bat, excuse me, back-to-back bats, been super strong. I can't really chase it up here just yet, but look, HSI is oversold. So that's the takeaway, guys, for today. That throwdown last week was actually pretty severe, and you let a lot of air out of the tire in a short period of time. We have not triggered anything just yet, and it might be till Thursday before anything is triggered. But last week's correction technically did a lot of damage without taking out a lot of price. Broadcom, sure. AVGO. Dot. And I think Broadcom's another one. You just blindly buy it. I might go buy this right now. I might go buy that off that dot. The open trigger was 160.23. The low today, 159.59, 159.90. And now you're 163.60, excuse me, 163.28. But that's a good one. And that's one right on the dot is an example of using that as a continuation. The hourly did have a pattern here. You have a counter trend dot, but it's a shark. So a lot of things at 160. A lot. I think that is a first. Today is day one, quite frankly. And we've seen that before. Look, last couple of dots on Broadcom. There and there and there. And you get the picture. How do you get the dot? You have to get the software. Get the software. Go over here. Oh, T-Coin webinar, guys. That'll be on the 21st. I did want to bring that up. August. We're going to start the T-Coins. Didn't get into them today. But again, send your username, TradingView username to hpc@sr-analyst.com. I'll give away on Thursday a free 60-day to somebody. But we need these dots. And the dots are good because they also represent at least two individual green bars. So you have a technical event and then you have a price action event that sets it up. And I'm also of the opinion, just stick with these big ones. Stick with the big SOX style. Here are the SOX. There's my SOX index. And even like, look, KLAC was HSI first one since the beginning of the year, or second one, sorry. But these usually are great markers for trend continuation. This Empower thing, no, that wasn't it. Was it Marvel? Marvel's a dot retest. You know, pretty stuck in that range, but we're at the bottom here. 66. A lot going on. ASML, we talked about that. Applied Materials, almost. HSI was yesterday. Check back is 213, and that is another one. Look, this trend is not going to stop on AMAT. Here's all my arrows. Look at all these. So if you can ballpark yourself within a couple of bars of there or there or there, here, you get it? I think it's pretty clear to see, you know, that's an uptrend. Buy on retracement. There's a whole lot of stuff that's going the wrong way. That doesn't make sense. I mean, there's a lot of stuff, a lot of crypto that is actually doing this kind of a thing. Tech, NASDAQ, Q, SPY. Look, they're larger direction. Trend is clearly up. Retrace, go up, retrace, go up, and continue. Continue. Just keep doing it for the next 2-3 years. It's not going to stop. The major trends that are unfolding at the moment, all right, you want, at this point, we would love a 10% correction because that would be about it. It just reminds me a lot. And again, a lot of decennial cycles happening, a lot of, there's just a lot of historic things that are repeating right now, where the 2022 was the low, then the fourth year of the decade should also be like a confirming low point, and then you run to year 7, year 9, and go. Couple more. Yeah, tech, look, tech is going to pause, finish this pause, and then I think it's going to do unthinkable things. But it's going to be unfair, unequal, like it's been, where only the top tier are really going to win. It's how it is. It's because of allocation, mostly. I want to just talk about gold before I get out. Gold, guys, 2450, 2480. It's really all about 2500. And I've been saying this for a while, that gold is in the middle of a massive, I mean, not just major, I mean, it's a massive historic move that's like this. 314 of whatever that decade range was is eventual. 10-year target, maybe 5-year target, doubtful, but you know, massive 1618 is 2900, and that's where gold's going. And I mean, in the next 18 months between now and the end of next year, really been thinking a lot about this. So gold is going to be, I think, for a lot of people, the way Bitcoin is. You're going to want to buy it on retracements, accumulate it, and not sell it. And we could probably, the best vehicle is to use the GLD. There's a lot of gold miners. We looked at a couple here last time. But look, you want it, whatever's correlated with the price, because that's what's going to move. You need to be in that vehicle. It's kind of like being in, you know, say, hey, I want to be in Bitcoin, and then I'm allocated to T coins. And then Bitcoin's the macro move. Gold's the macro move. Daily here, we're definitely up against some resistance like 227 for GLD. But if we get back, 222, we get back to 216 area and we get a dot, we're simply looking for this to do another continuation move. So I'll be updating this. It's going to be something, I wouldn't say new because we've been following gold forever. But the idea that gold is going not only to 2,500, but more like 28, 2,900, and that's going to happen in the next year or two. I don't even think two. I think at some point next year, gold's trading 28, 2,900. Doesn't seem like a big call, but I think a year or two ago, if you would have said that, probably would have been surprised. However you look at it, next year is going to be a big deficit year for the United States. It's going to be massive, no matter who gets in. They're either going to spend a lot of money or they're going to cut a lot of taxes. But either way, the first move of the next administration is going to be a big deficit budget that's going to be inflationary. That's why gold's doing what you spend $2 trillion more a year than you take in. Then it relates to gold. It's almost like the gold bugs have just said, enough. Where we know it's all happening. So think of it this way. What changed in the last 4 years? What changed where gold could go from 160 on the GLD to 225? 1,700 to 24, 2,500? I don't know. Something changed 4 years ago, but also something changed 15 years ago, and that's probably what this is more about. Go all the way back here, excuse me. That ever since the financial crisis, okay, that was the real event where the printer was turned on. All the printers were turned on, and that's why gold is done when it's done, and that's why what's going on now is a bigger deal. It's a more historic move than even just some kind of it's not just like a surging rally. This is a breakout. I mean, it's not only a breakout, it's confirmed multiple tests over the last 10. It's a decade-long breakout, and it literally was March, which was like the big confirming engulfing candle. So I think that's a part of the story. We see a lot of things going on in general, printer-wise. And I don't look. I'm bullish on all this stuff. Why? Because these guys are debasing everything. So I've said this before, the US dollar denominator side of the equation. You have your asset in the numerator. It's valued in USD. We know the USD, okay, is just getting basically liquidated. It's getting, monetized. The debt's getting monetized. So more dollars chasing fewer assets, fewer goods, inflationary, at least in terms of asset prices. And that's not a trend that's going to stop. So for gold, and like a lot of these, every correction's an opportunity. If it's a 10% correction, it's probably a big opportunity within an uptrend like this. And that's what we're looking for. Between now and into September, yeah, we want to see those kind of pullbacks, and GLD will be put in another step in the ladder on its way up. I think it's 300. I think the GLD thing, and it's not a difficult call, is in the process of doing this kind of a move. There you go. There. Bang it. 1618 is like there. 240, and then the bigger breakout moves, your extreme, and that's how you should treat it. How you should be kind of weighing the framework, that we'll go through that 1618 test, and then we move on to much higher extreme objectives, 325 or higher. But we're on our way trending to that as a first stop. But larger, all of this coming together where it's impressive. Even if we took off all of the ratio stuff, and you were just trend lines, you didn't know anything about Harmonic, Buy the trend line, buy the retracements on the trend line every time. And the other thing about it is, look, this is what most other people are looking at. That kind of a thing. Hey, this is broken out, da-da-da. Price discovery, keep going. And even if we got back to 200, a back test of that would be a dream setup. Just have to let that come in though. I really feel like gold's going to probably make a high level retracement, and whatever that next dot is, because even here, deep crab on the daily for GLD right now. So 222. Yeah, we're overbought at the moment, but I'm looking for the move down, and whatever that after the next retracement, like the rest of this market, is the big opportunity. It's just understand now, characters changed. Let's go through this 1618. Carthago's saying the dollar's going the way of the yen. Next to all FX major pairs crash, and now the USD is turned to fall. Maybe. I think it's what you're witnessing, okay, is just a continuation of what really started in earnest, I'd say in the 90s, amazing, or maybe right after 9/11, probably, with the dollar, they squandered the peace dividend. It's my 2 cents on it. The amount of money that they could have saved, could have paved a highway in gold, quite frankly, but they decided just to go for broke. They really did. And so the problem we're dealing with it started like 25 years ago. It truly did. So it's not just a recent phenomenon. It's not the last 4-8 years. But at the same token, if you want to see asset prices go up any way possible, they'll go up in that scenario. It's just that everything else gets devalued. It's kind of a hidden transfer of wealth. And it's happening now. I mean, that stuff is real. But the way to overcome it is through the markets, owning assets, not owing. And that's what we're trying to line up. So let's get on it. Let's come on back on Thursday. That's what I have for today. Thanks, folks. Great session. Give away a software. And if you have any questions, get over to me at harmonictrader@gmail.com, of course. Get HPC.